All right, hello everyone. So we've had another week gone. So let's take a look at what happened. Now, before we do, let's take a look at the swing days and swing hours for the week, right? 28th of April to the 2nd of May. As you know, these were all posted before in March, okay, at the end of 22nd of March. So these are the swing days for these assets and the trading hours for all of them as well. Okay, so let's see how that panned out, and let's go here. So let's take a look at gold first. Now with gold, swing day Monday, Wednesday, Friday. So let's first take a look at the daily. All right, so that's Monday, Wednesday. Now with this one, I've told you could sell all the way into there. Okay, and Friday being a swing day, we're probably gonna hit a low. I did say if we get a time and price at the lower end, you could do that. It didn't really do anything, but what did happen was, because Monday and Wednesday were like downwards days for us, selling the highs into the target zone, which was here, and it came right onto the price target there, as you can see. And if I just do this a little bit, you can see that's Monday makes a high, okay, Tuesday sizzles down, Wednesday also falling exactly at the trade hours. The vertical lines, as you know, are the trading hours. Oh my God, let me get this head out of the way. That's better. Let's carry on. Okay, so let's go back. Gold, Monday, Wednesday, Friday. Okay, and the way to go on the daily, Monday. So I talked about selling the highs, and this was the way to go. I also said you could buy the lows as well. Okay, so Monday buying the low was okay. In fact, I had two arrows there. Okay, so buying the low was okay, selling the high was okay. Why? Because that's an impulse wave. Swing day, wanting to sell the highs are okay and push it into the target zone, and the market came into the target zone. Wednesday was also good to sell off, and you can see on Monday, when the market made a high on Monday, all right, that's your Monday, Tuesday, market makes a high on Monday. And then on Tuesday, you see the swing hours, it just starts to sizzle down. On Wednesday as well is the trading hours. But the real thing on the trading hours was here, as you can see, that's London. London makes a sell. Now, why is this important? This is important because there's a gap here. When London pushes the market down, comes to a target, we can get rid of that now, we can get rid of that now. Market comes down, and then in New York, it goes back up. In fact, if you look at Wednesday's video, okay, I put them mostly afterwards on YouTube, but you can always find them on Vimeo as well, because they're always on Vimeo. Now, once the market goes back up, retraces, I did say if it goes down and then retraces into the US hours, you can sell this off, okay? And that's exactly how it happened. Market coming into Thursday, and that Thursday, as you can see, right in the bar, okay? It's the red bar I'm talking about. It's on the blue dotted lines, pretty much on the red line. So it's all pretty much according to plan. And then on Friday, as you can see, market just going sideways. Now on Fridays as well, I did say if the market comes down, you can buy. Okay, so buying the highs up here is, not always the best. Let it come down and you can buy. If you bought here as well, you should have been okay, because if you bought here, that's the trading hour and that's a price. Okay, it's a daily it's the daily pivot, it's the opening closing hour price at a trade hour. So if you bought here, you still would have covered the trade, because if you bought on that bar, your stop loss would have been the low of this here, and that's a pretty tight stop loss, as you can see. You would have been able to cover that trade as well. On Friday, I didn't do anything on gold. I did do a SP 500, which is rare for me, but we'll take a look at that in a minute. Okay, so that's gold for you. Let's take a look at what happened with the euro dollar. Again, we had Monday, Wednesday, Friday on the euro dollar. So knowing those are obviously good for us. Monday, Wednesday, Friday. Okay, so why did I say Friday you can buy? Because we're in a zone. This is a zone where you can buy in. Okay, the market sold on Monday, Wednesday, which is logical for us to do. Right, so that's same kind of mentality. Impulse wave, market coming up, it's a swing day, you want to sell the highs into the target, and that's how that panned out. Like I did say, this is a bit of a sandwich zone on Friday, okay, because we've got two PST levels here, which you can't see, but you can now. All right, so that PST zone here, I did say that's the sandwich zone, so we have to be careful there. And if you were careful, you should have been okay. See, that's the sandwich zone right there and down here. Now look, this is a trading hour. This was not a bad hour at all. So just around the daily pivot there, trading hours, market going up. I did say this could be a flow day, going all the way into New York. If you listen to the video, you should be fine, because I mentioned this hour being a good hour, okay, which was the 4:45. If you take a look at Friday, that's 4:40 there. All right, so that was like a good hour, and I did say if it finds direction, it should flow to closing. You see the 11:25. I said it should flow in the video. I said 10 past 8 and then further down into the closing. That's your 10 past 8, and that's your closing there. All right, 11:30 my time. So knowing the hour, knowing how far we're going to go is like magic. Okay, like knowing the hours. This is why Global Trader Club, it's the only place giving you hours. How far, according to the hours, should I follow this? All right, so that's like already a bingo trade. If you missed this one out, because this was early my hours, all right, this was when I was doing the video, which was like 6:30, 7:30 or something like that. Let's check it out. Yeah, 6:45, 7 o'clock. So and then the market kind of went up from here, which is like, yeah, could resonate with that, but that was the hour. So this was a PST zone. Market comes in, and if you take a look, 60, 13.92. This is why PST pricing is also very good. 13.92 is just there, as you can see. All right, so the market pretty much gets up there. It's a trading hour, and then that's it, game over. 10 past 8 closing, boom. Okay, so that's euro dollar for us. Also on, like I said, Monday, Wednesday, it just came down. All right, so that's the Monday high. Tuesday, Wednesday. If you take a look again, the trading hours, that's where you have a sell-off coming in. The market goes down in New York, breaks down, so the market has a downwards bias. It comes back up to the trading hours. So selling again at the trading hours in that direction is the way to go. And if you do that, your stop loss is going to be tight. You're either going to put it above the white line and just follow it all the way in. Why are you going to follow it all the way? Where are you going to follow it to? You're going to follow it all the way into the green bar. Okay, into that green box. Okay, so then when you're selling it off on Wednesday, you got room to follow this into Thursday, comes into the targets, and that's it. Okay, and Friday is a swing day. That's your Friday, market making a low, market pushing all the way in there. If you bought the low, great. If you sold high, great. This was in the Asia session, so not much to do in my time, because that was like 3 a.m. I think my time. Yeah, 3:40 there. Okay, 3:40, 5:35. That zone is there, as you can see. Market beginning to turn around in that time zone and just going up. Okay, let's take a look at SP500. Now with the SP500, I had a trade in exactly when I was doing the video, actually on Friday, which was right here somewhere. Okay, and I think it was on that bar. Yeah, so on this bar I actually put a trade in. I sold, put 2 trades in, one to cover the trade and then the other one to take further profit down, and actually did it on the video. I had a stop loss just above the white line. This one took profit because I had a take profit above the daily pivot there. In fact, where is that trade? Let me take a look. Okay, it's that one there. Okay, so I had one lot position open on that one. And normally I don't trade on Fridays. I don't work on Fridays, let alone trade on Fridays. But this was a good hour because I was looking at my book and I said to myself, you know, that is not a bad hour, considering the volatility has gone. So this 7 o'clock here, okay, this 7 o'clock here was a good time to trade. All right, and once that happened, market comes into 7:45, which is fine, but this was the one really. Okay, and then from 7:45 it just came all the way in to here. I took profit on that one, so that's the take profit hit. I moved the stop forward a little bit, okay, and then I said, okay, we'll just let it go. It's Friday, I'm not going to deal with it. And then in New York, the market just burst up. Now look when it burst up there. See the trading hour? It comes down to the daily pivot. This is where the market took the profit, okay? And then once it did, I just moved the stop forward. Actually, this was the time when I was at Al's school, had a meeting with the school principal. So I got out of the meeting, I saw that took profit, and I was going to the farmer's market, and then I put the stop loss on the second position down, and then I just let it go. Okay, and that happened during later on in the afternoon my time, and that's like my dinner time, so obviously no trading there on a Friday night. So yeah, that's how it happened. So one position took profit, the other one got stopped out. Still we're in a bit of a profit, nothing major, but that's how it was. Why? Because let me justify that as well, because Thursday was a swing day. All right, for SP 500, that was the only day I had a swing day for SP 500 this week. It was just Thursday, and because it was just Thursday, I said to myself, that's not bad, because if you take a look, the market did a high on a Thursday and it fell in New York. Okay, so we had a big drop off. On Friday, when I was looking at the market, it was up here at the trading hour and the gap was filled. So this bar was looking good to sell. Okay, that's the bar. All right, that's the manipulation. So that's the bar where the market was selling off, and it was a trading hour. I said, oh, this is okay to sell because I can just put a stop loss above the high and just let it ride, and this should at least cover my trade, and it did. So covered the trade and stopped out on the second trade, no loss, a little bit of profit. Okay, so that's that. Okay, so if you just focus on the swing days and the swing hours with a bit of technical analysis, it's good. If you don't know technical analysis and money management, obviously don't trade. Okay, so also what you might like, if you like reading, if you're a trader, you really should focus on learning. And what I do is I often write an article or two during the week on everything. Okay, every problem that we've got, everything really, from keeping discipline to why you need an edge. I wrote this on Friday, and I did this on Friday morning because I sometimes hear people saying, well, look, if you got good money management, you can make any trading strategy work. And that's not true. Okay, it's not true. So you need a good technical analysis approach. You need a good solid strategy, and you must have an edge. If you don't have an edge in the market, no money management is going to save you. Okay, so you need a strategy with an edge. There's a bloody good reason I've been working on timing and pricing the market for years, because time and price are the only two things you can sharpen up to have an edge, and you need an edge. And the only reason I'm trading is because I know I have an edge. If you don't know what your edge is, you shouldn't be trading. Okay, so give that a bit of thought. There are a bunch of articles here, and I've also gone through all of the problems that traders have. So it's really good read, and there's a video for all of these. You can watch on YouTube as well, but reading is really good. If you just shut your phone, sit down and focus and read, you can take a lot from that article. I know the new generation just wants to watch videos, but reading is a different ball game if you're learning. Now on the others as well, let's take a look. So let's go to Bitcoin. The indices all went together, but I'll take a look at them as well. The reason I'll take a look at them is Dow Jones had Monday, Wednesday, and Nasdaq only had Wednesday. So let's see how those panned out as well. But let's take a look at Bitcoin. What happened with Bitcoin? I had Tuesday or Wednesday, and I've got Sunday or Monday, all right, which is coming up tomorrow and the day after. So let's see. Now here, now this is a good one. Monday or Tuesday. As you can see, or was it Tuesday or Wednesday? It was Tuesday or Wednesday, correct. Tuesday or Wednesday. I said this zone was good to sell, okay, because I wouldn't be a buyer here, all right. And the reason I wouldn't be is because it's a sell zone, all right. But on Wednesday, the market did make a low. It's not exactly the low of the week, but that is a low, all right. So Wednesday, the market dipped down, but I wouldn't call it a successful swing day on that one, okay. It just wasn't. The only thing I would have done on this one, if it was a high, to sell. Now, if you sold a high, let's think about it from a day trading perspective. Why are we thinking about it from a day trading perspective? It's because we're using intra-week swing days to trade intraday. Okay, so we're picking, cherry picking the good days. So here is Tuesday or Wednesday. Now, if you had sold in this zone, you would have been okay, because the market did come down on Tuesday, Wednesday. They made a high and came all the way down. So if you think about it, let's open this up a little bit. All right, so that's Tuesday. So the market does a high on a Tuesday. Let's see, I didn't put all the hours here because I don't trade Bitcoin, but if we were to take a look, let's take a look at Tuesday hours. So we had 11:30, 12:45, 11:30, 12:45. This is 12:45, 11:30, okay, and then those were London hours. New York hours is 3:40 and 7:05. 3:40, 3:40 is there. Okay, 3:40, 7:05. That's 7:05 there. Okay, so this is the only time. No real sign of selling. There's no real sell setup. But if you had sold, if you said to me, Marty, this is the high it did on a Monday, okay, and I will sell because Tuesday, Wednesday, we're having a swing day, and I will use, let's say, the manipulation bar on a 15-minute chart because that's the fall, and you said to me this was the zone I'm going to sell at, you would have been okay to do so. Okay, there's nothing wrong with that. Okay, so this zone, but you would have needed to put your stop loss at least above that green line or above the white line there. Okay, if you did that. Why? Because that's the manipulation bar, that's the high, and if you've learnt from me, you know I would have taken that wick there. Alright, so your stop loss would have been above the wick, which is that one there. So if you entered around here, your stop loss should have been above there, and you should have been okay. Alright, as you can see. And also on Wednesday, let's take a look at the swing hours on a Wednesday. We've got 10 past 8 to 8:50, 10 past 8, 10 past 8 is there, 850 bar is going to be that one, isn't it? Yeah. Okay, it's that one there. So as you can see, market's selling off again. And look, what are we really doing? We're matching technical analysis with hours, right? So if your technical analysis has an edge, this is why I'm using more than one method, right? So let's work on this once again. So let's say you want to sell on a Wednesday, right? Then you said to yourself, okay, where is the place where we kind of took down? Where's the breakdown? Well, the breakdown manipulation is pretty much, it's on this bar here, on a 15-minute, okay? I'm just going to draw that, 15, and that's where the breakdown happens. It breaks the low off. That's the low of the previous day, breaks below it, closes under it. Remember, we're at the highs. Our bias is to sell off, right? Market comes back into trading hours, into your zone. That's your sell zone, all right? Once you sell here, your stop loss has to be above there. And then you can see that already would have given you like 1 to 3, 1 to 4, all the way down here. Let's see what the other trading hours were on a Wednesday. We had 11:10, 7:40 to 8 o'clock, 11:10 in the morning, 11:10. Okay, 11:10 is down here, so you would not have taken this one because it's not in your zone. Remember, price and time, we're just matching them up. You can't just trade on any trading hour. That is not what we're doing. Okay, so your bias is to the downside. You want to see a place where time and price match, so it goes down fine. Then you got 7 to 8 o'clock. What was it? 7:40 to 8 o'clock. Now 7:40 to 8 o'clock, I think I've already drawn those, which is there. Okay, so by the time we're down here, okay, then the market's already done what it needed to do. Now if you sold here, okay, that would not have been wrong technically. Why? Because the market broke down and you wanted to sell on a retracement, and that's fair enough because it's a Monday, it's a Tuesday or Wednesday swing day. When you push down, that's logical. You could have done that. Obviously that didn't work out and you got stopped out. If you sold here, where would you have put the stop loss? This is your zone. Okay, remember, if we get the hours wrong, you don't want to stay in the trade. So what would you have done? Well, what is the cause of the break? That's the cause of the break. Okay, and if you sold there, that's fine. It touched your green box. It's the trading hour. I'm selling here. Your stop loss should have been just above the green box there. Okay, in fact, slightly higher because of the gap. So you would have been above the white line there. So entry here, okay, or there, okay, with a stop loss just above the white line. And you would have only gotten stopped out like in the Asia session the next day. Okay, if you put your stop loss just above the green box, you would have gotten stopped out at the closing, and that's fine. But that is a small loss. All right. And that's basically it. So once the market did that, it just kept going up, as you can see. So the reason I say it's not a good swing day calculation for us, it didn't work out well for us because we didn't have that flow like we did with gold and with the euro dollar. Okay, because with the intra-week swing days, we're expecting like a day or two to flow, and that's the whole idea. And that's that. So let's take a look at Dow Jones. But I'm thinking you can appreciate how timing and price coming together really helps because you're not watching the screen 24/7. You know when to look at the screen, you know what to do and when to do it. And that's the most important thing. What time am I going to do this? So you're not really stuck there. Now this is Dow Jones. Now with the Dow, let's take a look. The swing days on the Dow Jones, Monday, Wednesday. All right, so that's your Wednesday, that's your Monday. Let's put an arrow there. All right, that's your Monday there, right? Monday, Tuesday, Wednesday, Thursday, Friday. So Monday Okay, remember with the swing days, there are two options. We can have a breakout or we can have a swing day. So Monday was a bit of a tricky day. And I did say this week is a bit sticky. The reason is, I'll tell you why I'm not going to put an arrow there. The reason is if you come down to your PST, that's your Wednesday, that's your Monday. And on a Monday, we're breaking out. I don't know if you guys are following the PST. Some of you using it. So if you think about it, let's put it out. This is a good case study. The reason I like to do the weekly wraps is because it allows us to kind of like look back, and we can actually do some kind of learning. Okay, if we're not learning as we trade with what the market is doing, you are going to be messed up. So make learning a good habit. Now here it is. This is Monday. Now you can see it's kind of like breaking up, and if you watch the video, I talk about it and I say this is breaking out, and I'm just like, yeah, it's a little sticky. Do I want to sell it? No, I don't want to be selling it here when we have a PST breakout. In many of my videos, you'll hear me say, don't stand in front of a PST breakout, and there's a good reason for that, and that is this. Okay, right, so once it breaks out, got room to go, and you can see the green box there. Just bear with me. I'm going to grab a cup of coffee. Let's do that. Let's close that off. All right, so I'm back. So once that PST breaks out here, it was like sticky situation for me. All right, and I did say we've got room to go up into the green box here. Okay, so that was like on the cards as well. And the reason I also said that is the gap. The market may want to fill this gap. And look at that Wednesday. Remember Wednesday, swing day. That's really interesting because the market comes down, does a good buy kiss on the red line, slightly under it there, and then pushes back up again. And it goes into the PST target on Friday. All right. So that was a bit tricky. Okay. But if you did kind of like work on it, you should have been fine. Let me refresh this. Bang, bang. And that should be it. All right. And that's London, New York, going into the PST, 41,360. Where did we get that number from? 41,361 is a PST level. The line is LCL1, which is the thin blue line, and that's why I said that could be a target today. And on the weekly, look, we're already breaking out on the weekly, so we've got room to go up. Okay, so that was a bit of a sticky situation. On the one hand, the market is selling to the, is on a downwards kind of motion, but this is a retracement, and we need to understand that this retracement needs to pull back. And if you learnt from me, you would be calculating this one there. All right, it's either going to be that one there, but what would I have taken? I'd take that one there. All right, so we still have a bit of room to push up. And if you also think about it, this is our magic number, 37.5. I like that ratio. And then if you think about it, the green box is going to be in there. Let me show that to you on the daily as well, so it will make sense to you. Let's take this up here a little bit. Okay. 37.5 on the daily now. So where did that come from? The top maybe there. So we still have a little bit of room to go because that's coming from there. Okay, so that's the top and the bottom. If I go to the weekly, that week is the 26th of Jan. So that is the 31st of Jan. So that's pretty much the week, the high of that week. And that is it. Okay, and that's your 37.5 there. And that's right in your green box there. Okay, so this zone is going to gap fill. as well. So this is why I put that there too. And saying that's the good buy kiss too, if you've taken technical analysis coaching from me, that's your good buy kiss. Green box 37.5 coming together. So what we're going to do now, look for a swing day in this zone. All right, so then you got to match your swing day to a swing hour, and you got to nail it from a sell level. Okay, so that's how that's going to pan out. Let's take a look at NASDAQ. Now that's NASDAQ, and NASDAQ as well right here. Wednesday, swing day. Let's take a look. Is that NASDAQ? This is NASDAQ. There we go. NASDAQ swing day Wednesday. Market dips down. That's the Wednesday. All right, and that's going into look Friday. Green box. Okay, so I did say this has got a bit of room. There's gap fill there. So market going up into that zone. Okay, if you're going to sell, this was the zone to sell. Now Wednesday market coming back down. You see it's a bit sticky on Thursday. Okay, and that's Wednesday here, and Thursday, Friday there. Now why is that interesting for us? If you take a look at Wednesday, all right, so hopefully you can read that nicely. I guess you can. What did I say here? I said, look, 7:40 to 8 o'clock is a trade hour, okay? And I've made a note next to it. I said, if it finds direction, target is closing. All right, if it finds direction, target is closing. So if I have a direction, you see the market going up here. How am I going to know if this is now a direction? Well, what is the direction? Because we're in the middle of nowhere, right? If I was at the low and the market was doing a U-turn, that's great because I'll just follow it all the way to the closing. But we're in the middle of nowhere because that's a high, that's a low. So what's that? There's two things you would have done here. Okay, you would have just waited on the breakout. Let me in fact draw it with this one. Okay, this is the gap fill. All right, so you have to be smart about this. This is the gap fill. Market fills in a gap. The manipulation of this fall starts all the way up here. All right, there. And this is your trading hour. Now look at your trading hour. Once the trading hours are done, and that's the low of the trading hours here. Look what happens. The market doesn't go down. It goes and breaks up. Once it breaks up, you're thinking to yourself, well, wait a minute. Marty made a footnote here. If it finds direction, target is closing. If the direction is up, I've got all the time towards closing to follow this trade on a Wednesday. And this is the New York session, right? So what happens? The market finds direction, starts breaking to the upside. You've got all this time to follow that trade. Now, how are we going to money manage that? This is an important thing. If I let me just get rid of these arrows. Okay. Now that we understand we're going to the upside, what I'm going to be doing here is I'm not going to be putting a stop loss down there. That is just going to be silly. Okay. I understand there are no gaps here, guys. Look, all the gaps are filled, so there are no gaps. If the market's going to push up, it shouldn't come back a lot. Okay. So if I enter the trade in any of these bars to the upside, my stop loss should be just under there. And that's it. So if I'm to enter, let's say I entered there, this is my stop loss. Okay. From there, that's giving you probably 1, 2. Well, with the Asia opening, 3, but let's forget about Asia opening. Let's just focus on the closing there. Okay. Now, here's a question. But don't I want to know where I'm going to get out before I get in? You haven't heard that incorrectly. If we are going to trade, this is money management, you've got to know where you're going to get out before you get in. Okay? So if you're going to decide to enter during this time period here, and you understand, this is my entry box here, let's make this a box. Okay, why? Because we broke out to the upside. So that's my entry. And then this is my stop. 2 things I need to know. What time I'm going to get out if I'm a day trader, what's the price target. If I don't know them, if I don't know these 2 questions, right, if I don't know them, then that's a drama for me. So I have to now figure out how far am I going to go. Okay, because closing, okay, I've got a time for closing, but that might just be a few points away. It doesn't mean that, it's going to go up until, midnight. So then I have to check the daily. Say, well, where can I get to? If I'm going Wednesday up, where can I get to? And the whole answer to that is this bar and the red dotted lines here, okay? And the red dotted lines here where I'm targeting as a price. So then I say to myself, okay, wait a minute. If I go long here, this breakout, if it goes up, I've got this green box here. I've got the red dotted lines here, which is like 19,946. And I've got a dotted line here from the other day, 58, 19,930. So I've got levels which to look up to when I'm getting in. So if I have 19,930, 19,930 is pretty much there. Okay, 930. All right, that's the zone there. So you see, if I'm getting in here, I've already got like huge targets ahead, and I have to know these targets beforehand. Remember, intra-week swing day, we could be going for a day or two, right? We can be going for like 2-3 days. We can be going from Monday to Friday, because sometimes you get a swing day Monday and a Friday, and that's like, wait a minute, if I'm at a low, I could be going all the way up into Friday. So getting out early is not an option if you want to add money to your account. Okay, this is like really important. If you want to add money to your account, you got to understand that when you have an edge, you got to like push it, because otherwise you're not going to make money, you're not going to lose money. If you just have some kind of, I don't know, some kind of a strategy and you're sticking with it and it's fine, but if it's on the average, you're not going to make money, you're not going to lose money with money management properly applied. But if you've got an edge means something that is like critical for you. Then you're thinking, well, wait a minute. The next swing day on the indices, all right, if Wednesday was a swing day, let's say to the low side, and I've got targets going up, then I've got Thursday swing day SP 500. So there's a potential that, we could end up going there. And now, because we all have the swing days for next week, what are you going to do? You're going to say, well, wait a minute, let's take a look at what's happening next week. Is it going to be a swing day Monday or Tuesday for the indices? All right, so that's a big fat question mark. But because you already have access to the swing days of the whole month, if you don't see anything here, then you say, well, let's take a look at next week and see where the swing days are. And you've got that information, which means you can still, if you follow it to the upside, you can say to yourself, okay, let's just do it, because we can follow this all the way to next week. Obviously, you don't want to be keeping it. Well, maybe you do want to be keeping it over the weekend. I normally don't. Okay, but that's how it is. All right, so you got room to follow it. You got to plan the trade, and this is why knowing the swing days, the swing hours, target pricing, entry pricing, where to put your stop loss, you bring it all together, and that is what makes this great. So this week also I'm going to put a bit of time into June, right? So we're on the 3rd of May, sorry. We're on the 3rd of May, it's a Saturday, so I'm going to start looking at June as well. Going to kind of like build that up as well as we go along. So knowing these swing days in advance, and understanding how far we can follow a trade during the day in terms of hours, in terms of pricing. Look at that, for example. If it turns, target is 11:30. That's on a Thursday. So if I have a Thursday, this is a Thursday. If the market turns at 7:45, let's take a look. This is 7:45 here, okay? And then the market has, if it turns, target is 11:30. All right. Now look what happened. The market did turn. Let's do this. And then it fell back down. All right. So that's 11:30. Was it 11:30? 11:40, 7:45. So that's just 7:45. So you enter on that bar. When you enter on that bar, where do you put your stop loss? This is a good example because, as you can see, it went up and then it went sour. So the market turned around and it just turned the other way. Why is that important? Well, because shit might happen. You enter here, right? Because the trading hour is now over. That's your entry zone there. Or should I do this the other way around? Okay, so here we have an entry there. All right. The stop loss is going to be under there. All right. That's how it is. And that's a really tight stop loss. Okay. Why? Because if you get the hours wrong, you don't want to be in there. Okay. And the market goes up. Now, if you've got tight stop loss just under the low, and the market's going in your direction, you've got enough to cover your trade. This is why on Friday when I was doing the video, I opened up 2 positions because I said to myself, this should pop down a little bit. And that will at least cover the trade. And the rest, I could just ride it along, see how it goes. Especially when I'm not going to be in front of the computer. It's all good. No stress. And then the market goes the other way. Now look, once the market goes the other way, it goes all the way into the closing. Okay. What does that mean for you? If your trade goes wrong, you understand that could be going all the way into the closing if you are wrong. So do you really want to stay in that trade? Psychologically, I wouldn't. So wait a minute, this could go, if I get stopped out, I don't want to be re-entering or anything, doing something crazy. If something goes against me, you want to get out. This is why timing and knowing is going to be critical, because we've made a calculation. And if the market turns at 7:45, the target is 11:30. If that doesn't happen, I don't want to be in a big loss, or I don't want to be hoping that the market will get to 11:30 according to what I thought was going to happen. So understanding that if the market is not going in my direction, going the other way, then getting out early is great because you're not losing any money. That's the whole idea of time and price. Minimizing risk is the priority. If things go in your direction, you're a double winner. You're always going to win good, and the market should more often than not at least cover your trade. That's why I open up 2 positions. Obviously, with money management, I'm not risking a bunch of unnecessary funds. Okay, it's always going to be like 1%, 2%, sometimes 0.5%, like today, like on Friday. Okay, I didn't enter with a huge lot. I said, you know what, I'm going to do 5 lots on the SP 500. And that was like enough. All right, and that's what I'm talking about here. So the same thing, you have to understand that timing is not just a profit maximizer, but it's a risk minimizer. And that's the beauty about it. Now, if you wanted to go up, let's say you said, you know what, I'm going to go up on a Friday. Why do you want to go up on a Friday? Because you understand that that's the target. So if that's your green box, which I put here like earlier on, if you follow the previous videos, if you're following all my videos, you'll know when I put these here. You see I've got these all up here. So if we go in a certain direction, we know what to target, right? And if we go down, we know what to target, and so on. So if you think about it, if that's going to be your target zone and you want to do an intraday on a Friday, and let's say you did want to buy, then you check your hours on a Friday. Where are they? Here they are. Okay, 12:50, 3:50, 4:40. So that's just, this is before London opens. Okay, so all of that before is like Asia session. This is like London heading into New York, and that's just New York there. So let's say 9:30, 11, 12:50, 3:50, 4:50, 12:50. That's 12:50 there, and that's also London morning session. Then we've got 13:50. 13:50 is here. Then we've got 3:40, and by that time it's already up there. That's your 3:40, and that's your 4:40 is going to be 4 bars away, which is there. Okay, so you can see market pushing up, pulling back, pushing up. Okay, did I make any comments about closing? From 10 past 8, I've said can flow to 11:25:45. So it is flowing into, well, pretty much closing. There's your 11:25:45 zone there. Hope that makes sense. Have a good weekend.